Hello, Theo traders. This is Gianni DePoce, and today is the 6th of February, 2024. And I want to review some important charts with you today as markets are coming back off a little bit the recent all-time highs. So let's go ahead and start off with the NASDAQ, which perhaps is flashing the biggest warning signal. We're looking at the NASDAQ 100 futures here because we haven't made a new all-time high since the 24th of January. Meanwhile, the Dow and the S&P have continued to make new all-time highs as recently as last week. So tech kind of backing off its leadership here. If we go ahead and jump over and look at the semiconductors, we're seeing some selling on that front today after a nice open to the week on Monday. But like I say, Monday is kind of the equivalent of the opening candlestick, the first 30 minutes of the morning, so to speak. So this is a little bit of a cautionary signal, but some of the intermarket warning signs that we've talked about in the last couple of weeks are actually flashing some positive signals today. Now, they have continued to deteriorate in alignment with our expectations, but overall, I think we're in a situation where stocks could potentially get one more pop higher. Perhaps the NASDAQ doesn't participate, but I do think we are closer to the end of this rally in the immediate term than the beginning. Now, I'm not calling for this any imminent high to be the high that we're looking for. Rather, I'm looking for it to be a high where we can see a corrective decline that follows. I still want to see new all-time highs going into mid-year, perhaps even into the back half of the year. But I am on the lookout for a pullback of significance in 2024, and that could be anywhere between 15 to 20% lower from wherever the all-time high forms. So that is the warning sign that I continue to see. And if we look at some of these chip names like Advanced Micro Devices, that is down today. This was a nice stock that we've had in the portfolio that we've already reduced. We did get stopped out of Rambus. They had a big earnings issue, and they gapped down. Marvel, that one's still hanging out near the highs. So overall, I think the price action in semiconductors, which again are a leading sector in the market, remains constructive overall, and I don't think it's I don't think it warrants shifting to bearish strategies, just being a little cautious. Now, obviously, the big news on the semiconductor front is Nvidia that continues to make new all-time highs. The stock's worth over $2 trillion. Don's been talking about some margin desks getting concerned about concentration risk with the stock in the S&P and the risks that it could create for the broader market. And that definitely is a concern. But, when you look at some of these other tech stocks like Meta, up 20% in a week, to think that a company of this size and magnitude could gap up 20% in a single day is pretty impressive. And I think speaks to the type of market environment that we're in. They also declared their first dividend. And as we, go through the Magnificent Seven landscape, they all look pretty good from my vantage point. I really like Apple. If we go ahead and zoom out on this weekly chart here, looks like we have a cup and handle for pattern forming here. And this is pointing to much higher prices later this year. We obviously have to clear this resistance zone in order to call this a legit breakout. But I do think that as a rule, consolidation near the highs of a move are bullish, and that's what we're seeing in Apple. The only other Magnificent Seven stock that has been struggling aside from Tesla, Google, their earnings results weren't really spectacular, but they are holding on former resistance turn support. I want to take a look at the bond market real quick because this has been one of our main intermarket signals. And last week we were looking at a potential return to the classic flight to safety. Bonds were bidding as stocks were exhibiting some volatility, but we completed another lower high here in both the 30-year Treasury and the 10-year Treasury. And so I think we could see a little bit more downside in the near term, as I think that the correlation between stocks and bonds will maintain itself for the coming months. I think that's the type of macro environment that we're in. But I like to see a little bit lower prices from where we currently are before we can reverse and start a new uptrend. And you take a look at the 10-year here. It did take out the low from January, but the 30-year did not. So I'd like to see stocks bottom a couple weeks after bonds do. And once bonds bottom, I think, you'll get a little bit of flight to safety at first. And then once the market realizes, hey, low rates are probably going to stick around for now, then it'll be a boon for stocks. On that note, let's take a look at crude oil, which is seeing a little bit of a bid here. We did take up positions on Petrobras, which is hanging out near its multi-year highs. That still looks nice. And Liberty Energy, which is down a little bit from its multi-year highs, but trying to complete a higher low, which would reinforce the bull trend. So that's what's on my radar right now. I want to take a look at precious metals here because I think the price action in these markets are starting to become interesting. Gold is essentially consolidating near its all-time highs. And like I just said a moment ago, that is bullish price action. So, my favorite stock in the space continues to be Eldorado Corporation. Everywhere I look within the precious metal complex, I cannot find a stock that has a risk reward opportunity like this, that is displaying relative strength like this. So I really like Eldorado. We've had this for a few weeks now. And here too, it's consolidating near the highs. So, you look at this weekly chart here, you got the inverted head and shoulders formation, got a little bit of a rectangle or, symmetrical triangle pattern over the last several weeks. So, that is also constructive as well. Let's go ahead and take a look at crypto because I know that's a hot market that everyone likes to look at. Start off by Bitcoin, hanging out near its recent highs. But my concern here, as long as it's below 43, 45,000, I'm a little skeptical on the long side of this. We could be forming a lower high, which could be the first step in a corrective downtrend. So if we can't take out this high from January, interestingly, Bitcoin peaked a month before stocks have in the case of the NASDAQ, or May if we form a high in the next week or two. And so I'd look for Bitcoin to, perhaps drop into the mid $30,000 area. And if the, correction gets significant, the low $30,000 area. But I think that could be a good dip buying opportunity, as this has been a really nice leading indicator with respect to risk appetite in the overall market. You take a look at Ethereum outperforming Bitcoin, and I'm not really surprised to see that. I think some of the cyclical factors in Ethereum put it in a better position compared to Bitcoin. In other words, Bitcoin has to do a little bit more consolidation or perhaps correct a bit more through time to reset some of its cyclical factors that are flashing some warning signs. But, a lot of the stocks in the space, whether it's Coinbase or MicroStrategy, kind of consolidating their losses, I don't really see that as bullish price action. So that's what I'm looking at in this market right now. I hope you enjoyed this video. I will see you back in the TheoTRADE chat room. Gianni DePoce signing off. I will see you next time.